Well, we spoke with Ridham Desai of Morgan Stanley in order to understand his outlook on the markets, where he sees the indices headed, the potential for the broader markets, as well as the impact of the second wave on economic activity. And Ridham started off by saying that he was very categorical that the impact of the second wave on the overall economic activity has been much milder and much less than what we saw the first time around. The first time around, he said that the markets were corporates were taken by surprise, given that there was a lockdown that was announced. This time around, we were a lot more prepared, and therefore the second wave is unlikely to have a very severe economic impact. He also believes that businesses this time around were far more well prepared in order to face disruptions due to the second wave. He believes that as economic activity bounces back sharply, we will see the overall economy as well reopen, which will lead to the economy bouncing back quite soon. In terms of looking at the corporate balance sheets, he believes that they look a lot better now, particularly when it comes to the banking sector. They have managed to bolster their corporate balance sheets over the last few years. And in fact, he is expecting an overall bounce back as well when it comes to corporate India. He believes that the retail leveraging in banks gradually over time is going to pick up pace. And in fact, he believes that all macro indicators are pointing towards an economic recovery. The cross-asset indicators, Ridham Desai believes, are extremely positive as of now, whereas the liquidity indications remain a bit neutral. As of now, when it comes to the overall market valuations, Ridham Desai is of the view that they do not suggest any scope for any sort of a near-term upside. He believes that the rates are going to go up, interest rates are going to rise over time, and the economic impact due to the COVID pandemic and the second wave is going to be largely transient in nature. In fact, Ridham is also of the view that when the Fed falls behind the curve, we could see stock prices falling, and it's largely going to be driven by these global factors. Rate hikes, he believes, will trigger a sharp correction, and he believes that as of now, we are currently in very early stages of the bull market. Corporate profits are going to rise, and that's going to trigger growth in the overall investment cycle. In terms of individual sectors, he believes that the volume growth in metals is going to pick up as we see the economy improve. It's exciting to see new companies as well coming into the markets. And he believes that the mid-caps that are listed on the exchanges are not small firms. And with a lot of conviction, Ridham Desai says that small caps will outperform large caps over a 4-year perspective. In fact, he also believes that we are likely to see growth in the cement sector, preferring it over metals because there's no policy ambiguity there, and the markets are currently out of the second wave, and that India's per capita income is likely to double over the next few years.